The renewable hydrogen landscape in India is seeing huge interest, with investments coming from both the listed and the unlisted companies. According to Morgan Stanley, the total addressable market for hydrogen could be $19 billion by 2030. This, of course, is the clean part of hydrogen. So let's split it up further. This $19 billion market is combining both blue and green hydrogen. Blue hydrogen is manufactured using methane and steam, which then converts to grey hydrogen. This is the polluting hydrogen. So the technique used to make blue and grey hydrogen is the same, but the management of CO2 in this case differs. Carbon capture and storage technology is used to capture the CO2 from grey hydrogen, and from that, blue hydrogen is produced. Many companies are investing in the carbon capture technology in India as well. It is still at a nascent stage. Come to the buzzword, green hydrogen. It is cleaner because water is broken into hydrogen using renewable sources like solar or wind energy. This is then processed in an electrolyzer, again a place where many Indian companies are investing. So how will this big $19 billion market be split? Morgan Stanley has made those estimates. Around $0.2 billion will be in the telecom space. Heavy trucks and buses will be $0.1 billion. This looks small compared to other sectors, but the usage of hydrogen in CVs could take some time to become a bigger opportunity in short period of time, versus the city gas distribution companies that will have to blend in green hydrogen, which will be a $1.6 billion market by 2030. Refining sector will see 25% mandatory use, so will fertilizer. This will be between $6.9 to $7.3 billion of market. Now, steel is a $2.6 billion market for green hydrogen, followed by cement and shipping at $0.1 billion. Now, why is it important for stock markets? Because big players have invested in this space. Reliance Industries will be manufacturing low-cost electrolyzers for manufacture of green hydrogen for both domestic and global use. IOC will be venturing into green hydrogen project, is targeting 5% hydrogen produced as green hydrogen by 2027-2028 and 10% by 2029-2030. ONGC has inked pact with Greenco to spend $6.2 billion on renewables and green hydrogen as well. BPCL will be setting up 5 megawatt of electrolyzer system for green hydrogen manufacturing. GAIL will also set up electrolyzer to produce 4.3 metric tons of hydrogen per day. NTPC has a target of 5 gigawatt capacity in green hydrogen and ammonia business out of its 60 gigawatt green portfolio target by 2032. JSW Energy has contracted India's largest commercial-scale green H2 of 3,800 tons per annum, and Antique says green hydrogen manufacturing will act as a sweetener here. IGL has signed MOU with Acme to jointly supply green hydrogen and set up infrastructure as well. Company says production of green ammonia from green hydrogen has potential to be another business vertical for IGL. MGL says they are exploring green hydrogen space, as there could be some blending of green hydrogen into CNG as well. L&T has commissioned green hydrogen plant at Hazira that produces 45 kgs of green hydrogen daily and is used for captive consumption. HPCL too aims green hydrogen capacity of 24,000 tons a year and will be increasing it gradually. So definitely a lot of interest in green hydrogen space, and the market is huge. The current pricing of green hydrogen is $10 per kg, and the expectation is it could go down to levels of $2 per kg by 2030. In fact, we spoke about the market size. A recent IEA report suggested that a transition to clean energy is a huge economic opportunity, and renewable batteries, green hydrogen, and other clean technologies could create a market worth up to $80 billion in India, again by 2030. So if Morgan Stanley says $19 billion of that could come from hydrogen, means there could be a 23 to 24% contribution coming in from hydrogen itself. Interesting space and a lot to track here, and definitely worth putting spotlight on.